time is it? Is it?
Yes, I think we'll
It's
kick it off.
showtime.
Yep. So it looks like we'll kick it off right here. Hello, everybody, and apologies for the technical difficulties we seem to be having here. We could just do this in more of a podcast format, I guess, for now. So thank you all for attending. This is what we'll call a cannabis update. And we have with us some very, very interesting speakers. I will let them introduce themselves in a moment. I just want to let everyone know that the Q&A section is open. So if at any point throughout you have a question, please feel free to type it in. We'll address it when appropriate. So with that being said, I want to allow the panelists to introduce themselves. So Mitch, why don't we kick it off with you?
Great, appreciate that. Thanks, Zach. And I'm particularly disappointed there's no video because it's the first time that I've been wearing pants in 6 weeks. So
I wasn't going to ask.
Yeah, it's exciting to be here on this. This is a novel way of celebrating 420. So happy 420 to you all. I'm a lawyer by training. Started off at Greenberg Traurig in New York. After being there for 6 years, went to work at the Securities and Exchange Commission as an enforcement lawyer. After which I went to work for a private equity and hedge fund in New York City called Iroquois Capital. And, feeling like that job was becoming too risky, with Dodd-Frank, I decided to go do something a little bit more safe and went to work in the cannabis industry, and went to Oakland in 2013, worked for Steep Hill Labs as their general counsel, and sort of as a de facto in-house investment banker, raising money for a West Coast company, and sort of saw the need to connect East Coast professionalism and capital to the West Coast movement that I really believed in. So came back to New York in 2016, started a law firm with my partner, Dave Feuerstein. People were wondering why we would do that in New York, but we had our reasons, and here we are 4 years later. We're now 15 lawyers practicing cannabis law pretty much all the time, advising multi-state operators, dispensary owners, consumption lounge owners, ancillary tech companies, writing license applications, representing funds. And we launched our own private equity fund just right as coronavirus was hitting. So much for good timing, but it's called Focus Growth Capital Partners. And, and we're dealing with coronavirus. We're dealing with, legalized cannabis in the time of Corona, like the rest of you. So appreciate the opportunity to be with you.
All right, thanks, Mitch. Matt?
Oh, hello, everyone. And thank you, Zach, for the invite and for, putting this all together. My name is Matt Carnes, and I'm the founder of Greenwave Advisors. I founded the firm in 2014, so been at it now a little over 6 years. Prior to I guess we'll start with my background. I'm a CPA. Started my career in public accounting. I worked for back then it wasn't 4, it was 6 or whatever it was. After that, I worked at Texaco. I worked in several different financial roles, built exposure to multinational operations, spent some time in Asia, in Europe, Latin America, and so forth. And then after that, I got my MBA. And after that, I started my career on Wall Street as a sell-side analyst. I covered, at the time, radio broadcasting and cable television. That was, which is now Wachovia. From there, I went to Cowen. I spent a great number of years there in satellite communications. And then from there, went over to Bear Stearns. From Bear Stearns, I spent probably about 4 or 5 years at a hedge fund, a long-short equity fund here in New York. And then as the world turned upside down with the financial crisis, I was then scratching my head, gee, now what to do? So with that, I was, really took a strong interest in medical marijuana for a number of reasons. And thought, well, gee, why don't I put all the skills that I've developed over the years between the auditing, the buy side, and the sell side experience to provide investors with a framework and with a a better understanding of the complexities of the emerging cannabis industry. I was very early to do what I did because back in 2014, nobody would listen to me, talk to me, thought I was crazy. The world is going to change now. So I'm excited, kind of to the next step. And despite we'll go into in this discussion, there's still many opportunities in the industry despite COVID.
All right, perfect. Thanks, Matt. And Aaron?
Hey, everyone. My name's Aaron Lachant. I also am a lawyer. I'm a partner in the law firm Nelson Hardiman in Los Angeles. And I'm also the CEO of our affiliate consultancy, MMLG. I've been working in the cannabis industry since 2009. My law firm is a healthcare-based law firm, and we started advising the initial wave of legal medical cannabis operators in California. From there, we've gone on to represent regional chains of businesses. We've seen companies grow into multi-state operators and have worked with municipalities, publicly traded companies, and private equity groups in the cannabis space. We really like to take on ambitious projects. We've written rules for City of Los Angeles. We opened the first consumption lounge restaurant in California. And we're now doing projects nationally. And that's what we use our consultancy MMLG for. So we've taken what we've learned in California over the last 11 years and are doing work all across the country. It's great.
All right, thanks, Aaron. And now it looks like we got through our technical difficulties, so you can see our wonderful faces here now. With that being said, just as a matter of housekeeping, we're not giving any advice here today, so please don't take it to be any specific advice. If you have any questions that you don't feel comfortable asking on a Q&A or an open forum, please feel free to reach out to us specifically. We will, of course, share our contact information, websites, everything else. So just that as a matter of, again, housekeeping. So with that being said, Matt, maybe you want to take a couple minutes and just walk us through what you're seeing in the industry right now.
Okay, so since, post-COVID, we don't have a lot of information because, this really started sort of, post St. Patty's Day, the 20th or whatever. So a lot of information for for the month end March or the first quarter hasn't really been disclosed yet. But what we do see is in certain states, there's definitely been, it's been well publicized that initially there was a huge spike in sales as people sort of got nervous about what the future would hold. So they stockpiled a bunch of inventory personally. But we're seeing that a lot of that is trending downward now. The interesting thing is that in certain states, there's been an uptick in medical marijuana applications, particularly, what we see in Massachusetts as they put a kibosh on the recreational sales. Those rec customers now apparently have gone to a medical market. So there's been a huge surge. I've spoken to some of the folks that work in the medical marijuana group in Massachusetts, and the phones are ringing off the hook there. Interestingly, though, in Florida, where they disclosed weekly statistics, it's been flat. So it seems like people have more anxiety in Massachusetts over COVID than they would in Florida because of the spike. So it's really hard to say, what really the actual results have been since this outbreak started. But what I would say is, and we could talk about this in greater detail, what the future holds in terms of post-COVID.
Hey, Matt, I'm sorry, I know, Zach, you're the moderator. I was curious though. Matt, is that, do you think that's Massachusetts, Florida? Because, Florida's a medical market, right? And so they're probably, to the extent that cannabis was deemed essential, right, people would think that they would have access to it. But in Massachusetts, and maybe it turned out to be rightly so, adult use, got shut down. So people,
right.
Right. So.
Yes, yeah, so that brings home the point that, what's that?
I was just about to say that is a good transition point. Mitch, maybe you want to share a little bit about what you're seeing, and we do know that market by market, this is being handled very differently.
Yeah, I mean, what we're seeing a lot. I mean, look, we're so pleased, right, to see that this is it's interesting here on 420 to see that this is, you know, we're talking about an essential good, right? And that's something that I think is one of the sort of, there's not too many positive takeaways from coronavirus. So I'm not going to try and spin it as a positive, and even if it were, I wouldn't want to spin it that way. But the fact that it's, you know, it's an essential good. People are using the product medicinally and or recreational to help them get through this time. And so I just think that's, you know, it's one of the takeaways of this, you know, here in a global pandemic, you know, which I don't know how many of those that we can anticipate having over the course of our lifetimes, but that cannabis, you know, sales remain strong even after the hoarding behavior of March. You know, we're advising a couple of multi-state operators and license holders who are seeing strong sales figures. You know, in most of the states, I mean, Massachusetts is a particular situation where the governor didn't want you know, people crossing state lines to come get product, which people were doing before. So we've seen that curtail. But you know, you know, we're seeing a lot of developments. I would almost like, you know, sort of like, if I had to put it under like a heading, it's like sort of like accelerating the future of cannabis, is I feel like what we're seeing as a result of this being an essential service, but also, you know, people are, you know, social distancing. So there's certain things I think that flow from that. And I'm sure, Aaron, you're seeing that, right?
Yeah, so I think one of the big things we've been seeing we're based in Los Angeles, and so everything has a big California slant for us. But the biggest thing we saw was the acceleration to delivery. As soon as cannabis was declared an essential service, there was an absolute rush by existing retailers to figure out how do we implement and deploy and get the word out about delivery services. And it's interesting because a lot of businesses are opting to use their own in-house ordering platforms. They're avoiding services like Weed Maps or Ease, where there's some sort of percentage, where there's some sort of compensation attached to a third-party technology provider. And so just to see the rapid deployment of delivery has been interesting. But at the same time, you know, the one thing that's been challenging has been figuring out how do you maintain a safe environment for customers, and how do you maintain a safe environment for your employees. And unfortunately, because of the cannabis prohibition, you know, cannabis licensees are basically turning to the private market in order to obtain things like masks and gloves and sanitizer and Lysol. And that's proven difficult. You know, businesses have had to send employees to Costco to wait in line for an hour in order to, you know, get a chance at getting some hand sanitizer for the day. So even though they've been deemed essential, there's been very little support for obtaining personal protective equipment for employees as a result of the federal prohibition. So while we're seeing great advances and you know, delivery mechanisms, a lot of operators are facing new challenges about how to deploy their essential service in a safe and efficient manner.
Mm-hmm. So given that you have a lot of experience in California and a lot of recent experience in Illinois, Aaron, how would you compare the two?
You know, I think the two have really seen similar things. Both of them have seen a slowdown. Both of them declared cannabis an essential service, which is great. It's very interesting for Illinois because they've only had adult use cannabis for about 4 months now. And it's in the course of 4 months, it's gone from a brand new rollout to essential service, which is awesome. But at the same time, you know, one of the things we've seen is a total slowdown of new opportunities for new market entrants. In the beginning of the year, Illinois was accepting applications. In December, they were accepting applications for new retailers. Throughout the first quarter, they were accepting applications for new cultivators and new manufacturers. Illinois had to extend the deadline for applications twice, given all the attention that's focused on COVID right now and all of the budgetary shortfalls coming in from lack of just general sales tax and general revenue. I imagine that Illinois is going to have trouble implementing the expansion of their cannabis program in a reasonable way. Same thing in California. A lot of businesses were looking at cities that were primed to open and take on new applications. Those opportunities have slowed down entirely as state and local governments figure out how to respond to COVID. California's state licensing agencies are still moving along fine, but the locals who provide that first authorization have essentially put expansion to a stop. It's great if you're a licensee and you have your license and you're operating right now as an essential service, but if you've been sitting on real estate waiting to get into one of these new markets, you're going to be waiting a little bit before those opportunities come to fruition.
Now, this is an open question, but do you all see this changing? Aaron, you hit on a great point that states will be looking to supplement some of the tax revenues that are lost. Does that accelerate a state like New York, which has had fits and starts, or some of the other states that may be on the fence? And I open that up to anyone who wants to take that.
Well, I would say at this point, it's almost too late, because by the time a state implements and gets a market up and running, it could be longer than 2 years. We've seen that time and time again. And by that time, in my view, there has to be changes to federal prohibition, to laws. In New York, it's, we're dealing with a very, very robust illicit market. And I think, one of the risk factors that I really think about a lot now is the impact post-COVID, the economic damage that will result from all of this, and the price sensitivity to the cannabis product, which would, point to a more robust illicit market. And so I think that's one factor, that people have to think about. And even if states do implement and everything is up and running in a short period of time, which is not likely, how are they going to compete with the illicit market?
I would say that, add to that though, that look, Matt, I don't disagree with you that everything we always talk about is a 2-year window, right, between enactment and then actual effectuation where you see product on shelves. But clearly, I think, unfortunately, the reality of cannabis legalization has nothing to do with probably all the reason why we all got into it, right? As believers in the movement, believers in the plant, etc. It's always economically driven, right? So that I do think this this time period is going to have a significant impact on these state budgets, and it does seem like this is one place that they can go to. I mean, these holes are going to be big, and I don't think cannabis can fill it, but they're going to look to. I do see it. I do believe that it will accelerate that. That being said, I mean, we saw recently in New York that it may have had the opposite effect. Not because of economic considerations. It just was, there's a lot of. It became what was on the front burner got pushed to the back burner, and COVID became front burner. So that's a reality. But in terms of trying to figure out ways to, fill holes in budgets, I think cannabis is an obvious place to go.
The practicality of that, though, I just think is questionable, because I think if you look forward and think about the market in 2 years, by then, if prohibition hopefully will have ended. And I think if anything else, this will prompt the acceleration at the federal level. I think that's where the issue is right now. Once that happens, then the doors open for multi-state, multinational companies to come in and do their thing and get the market up and running. It will accelerate, the employment issue. They'll be able to fill jobs quicker. I mean, a lot of things could happen a lot quicker when these big companies come in.
That's a good point.
So do you mind, Matt, maybe diving in a bit to what you would define as multinational companies becoming involved, maybe talking about some of the funding issues that are there?
Yeah, so I mean, if you look at what's happened in the past, it's very unfair that Constellation Brands was able to, they invested in a cannabis company, but it's not a US-based company. That's Canopy Growth. And the same holds true for Anheuser-Busch and their alliance with Tilray and Cronus and Altria. Why aren't those dollars they haven't been able to deploy those dollars in the US. So if you change the federal law, those companies and other multinational companies will then be able to come in and swoop up, you know, some of the better assets and just get everything reinvigorated quicker than if you go state by state by state by state. Yeah, that's my take on that.
Very fair.
Yeah.
So we did talk a little bit about, again, state by state. How do you guys anticipate the supply chain evolving as we get deeper and deeper into this crisis?
I mean, what I would say, you know, kind of part and parcel to the whole disruption from the illicit market, the big concern I have, it's not directly part of the supply chain in and of itself, but it's a process, and that's lab testing. And, you know, I think, you know, that's required by law. That's a compliance issue. And I don't know the sensitivity, or I've done any shock analysis to say, okay, well, if we have a 20% reduction in the retail sales, in the grows and so forth, you know, what that translates into a reduction in revenues for the lab testing. But I would venture to guess that it's pretty significant. And if a lot of these lab testing companies are not able to fulfill the demand of whatever's remaining, then, you know, it could be problematic for those that are turning to the legal market.
And at least, you know, the one good thing to point out is that largely these cannabis businesses, they're entirely intrastate businesses that have, you know, vertically integrated supply chains within those states. All of the cannabis is coming from one state. It's being manufactured in one state. There may be packaging and technology and manufactured products coming from abroad, but by and large, these are entirely intrastate business. And we, you know, short of a choke point happening at the labs, you know, we haven't seen any sort of slowdown or supply chain issues or shortages on the dispensary shelves yet.
Right, and I would just add to that. So we represent a company that does packaging for cannabis industry, and in this period of time, they've already shifted from, they've made new molds, and they've shifted from manufacturing a lot in China, moving to India and other locations. I mean, I think, Matt, you know, you're not wrong that lab testing is a choke point for the industry. It's why I, in 2013, went into that aspect of the industry, to believing it to be a bottleneck. But, you know, the one thing that COVID cannot kill is the entrepreneurial spirit of an American business person. So
Well,
that if there is what you're suggesting, that it does become a choke point, even more so than it's been, someone's going to fill that void, right?
Oh, absolutely.
They're going to find a way to get that product through. I was amazed when I was on the phone on Friday with our packaging client to find how quickly they had come up with new molds and found new manufacturers for their childproof packaging for the industry. So I think let's not underestimate that entrepreneurial spirit, which is as robust in cannabis as any industry that is currently.
And I wouldn't disagree with that in any way, shape, or form. But then when it comes down to doing an analysis, yes, I clearly, you know, I wouldn't disagree with that at all. I'm sure there will be a way to fill that void if there is one. But at the end of the day, yes, clearly demand is there. Demand will always be there. Demand has always been there. But it comes down to where are you going to, in what channel will you satisfy that demand? Will it be in a legal market, or will it be in an illicit market? And that's the question. So it doesn't matter who's doing what at what other end. It's a matter of where the consumer is going to buy it. And I honestly think as unemployment ticks up, you know, clearly people will go to the illicit market. There will also be some people that will be growing their own product and selling it. And this is not a pot plant, by the way.
No questions asked, Matt.
That's funny.
Yeah, I mean, that's a concern. Is it the end of the world? Probably not. No, I think there's a lot of opportunities in the industry, and everything's going to resolve. It's just, you know, there's just certain bumps in the road that probably we wouldn't have seen, you know, a few, you know, months or so ago.
Right.
That's very true. And how do you anticipate the states and or federal government responding to what appears to be a growing black market?
You know, I know Aaron probably will. I'm going to just throw my 2 cents, because Aaron's probably got a better sense from California. That's such a challenging state in this regard. But it's funny, Aaron, before you were sort of comparing, and maybe Zach led you there to compare California, Illinois. I've always thought that, you know, California and Michigan shared a lot in common. In their,
Yeah, no, I agree. I agree with you there.
And what we just saw something pretty recent in Michigan that that had a significant effect on curtailing the black market. So there was this caregiver model in Michigan, right, that existed before the licensing model, and you know the state was allowing, you know, was trying to work with the caregivers, didn't want to just like, you know, put them out in the cold because of this new licensing program. So it was giving them you know, significant windows of time to get their product from their caregiving you know, production into the legalized market. But what really was happening was those caregivers were buying illegal product from California, Washington, and Oregon, and then getting it into the marketplace that way and making a lot of money brokering that trade. Well, the state of Michigan saw that and shut that down and said, you know, we were working with you, and now that doesn't exist anymore as of today, not as of 2 months or 4 months. As of today, no more moving product from caregiver model to the licensed market. So that was one of the more positive movements I've seen in a state with respect to kind of, you know, curtailing an illicit window. And I know a lot of, I reached out to a lot of Michigan licensees after that, and they were, you know, they were all in great spirits over that because they've worked hard and paid a lot of money to be license holders and hired lawyers and compliance consultants and all sorts of things to do it the right way. And so like there's one example of a good measure, but I'll let Aaron go into California because it's
it's the unlicensed market is always going to be a challenge, and if anything, this whole safer at home campaign has done more to shutter the unlicensed market in California than anything else, simply because those stores can no longer operate during this time period. There's such a pressure being placed on businesses who are staying open, who aren't supposed to be open right now. So the retailers in California are actually doing very, very well at this point. California is a unique place because, you know, the unregulated market has always thrived, and especially now because the penalties are so low. The penalty and the taxes are so high. With only misdemeanor criminal charges, which really just results in probation, there's very little deterrence to stop folks from opening up unlicensed stores or unlicensed delivery services. The only way, you know, to stop it is to have strong penalties like New York and Illinois and other states that still have cannabis sales as a felony. But the problem with that is those laws have been enforced disproportionately against communities of color. So I think it's very unlikely that we're going to go back to a system where we're having super steep cannabis penalties. I think the strongest way, if California wants to fight the unregulated market, is to lower the tax rate and just create opportunities for folks to transition into the regulated marketplace. By creating those opportunities and having a low barrier to entry, you know, you're going to capture the largest share possible. And at least at that point, you're all competing on the same playing field. It's very tough to compete with the unlicensed shops, you know, when they're charging 40% less than the retail shops because they don't pay taxes, they don't take their product through the supply chain, they don't have laboratory testing. And quite frankly, their product is better. There's a lot of tremendous great growers out there who want to participate in the regulated system, but they aren't afforded a pathway due to lack of opportunity, lack of capital, whatever it may be. So if California really wanted to get serious about the unregulated market, you know, they would keep this shutdown going for as long as possible, or they would get smart and create those opportunities for folks to transition.
Now, you mentioned lowering the tax rate, and we've seen that tried by, I believe, Governor Newsom put through some legislation previously, or recommended some legislation previously. How effective do you think that would actually be?
We're watching it play out. It's happening at the local levels. Local cities and local counties are, you know, rolling down the local tax rate to just 1%. Where previously it was 7 or 8% on top of the 15% excise tax, on top of the 10% sales tax. You know, they're lowering it. The cities are lowering it. So we're going to see if this great experiment works by lowering the tax rate, are we going to be able to transition more people to the marketplace? I mean, economics says it should, but we'll see.
It worked. It worked. You know, I haven't followed it so closely since I'm not in California as much as I used to be, but you know, we used to go from California up to Washington, where Steve Hill had another lab, and there, when that program first was enacted, adult use 2014, there was a 25% excise tax at every level, at every transaction, between every distributor, between everywhere you could charge 25%. They quickly realized it, and they did away with that because it was killing the program. So I hope that if there's, you know, anybody on this webinar that's, you know, either a lobbyist or somehow involved in the process of these states where we are, you know, your earlier question, Zach, about states, you know, enacting programs, that they do. It's what Aaron just said. They need to get smarter. I mean, we've already seen, it's not like, you know, you can't say what you could say like 6 years ago where this was brand new. We've now seen it play out for 6 years, and we've seen this in alcohol and tobacco. I mean, let's start off with low taxes, allow people to come into the market, and you can turn them up over time, and no one's gonna, people pay $22 for a box of cigarettes in New York City, and I don't know that people really complain about it, which I think $18 is probably tax, right? But they didn't start off that way. And so that is, it's a real conundrum, because like I said before, most of these programs are economically driven to generate taxes, but they get so greedy so quickly that they almost kill the golden goose, you know?
So,
Right, yeah, because then they're not going to be able to compete with the illicit market as you know.
Right, exactly.
So then the fundamental question here is how, and this is more existential, how do you get these different legislators to understand that is the issue, that you can't tax at a high level?
If they don't know that by now, I mean, maybe I'm just, I mean, I know for a fact that Massachusetts, when they went through their economic analysis of the, you know, the industry and pricing and sales tax and all that, they indicated that, you know, they're very much aware of the sensitivity in price and taxes, and that consumers will still gravitate to the legal market to a point. And that point is really dependent upon their economic situation. And that, you know, comes back to the point I made earlier about just a concern I have, something to be cautious about, is the, you know, the competition that's going to only intensify. But having said that, that's not the case in every market. I mean, right now, you know, in New York, it really doesn't matter, right? Because we don't have a rec market. So the market is what it is. The medical market isn't really doing anything anyway in New York. But, you know, there's some pockets of the US where, you know, so what, you know, you have a market. I mean, maybe there isn't, maybe there are high taxes and so forth, but there's really not a really good alternative in terms of an illicit market. So it really depends. I can't generalize and say the illicit market is really going to totally dominate, because it's going to be case by case or state by state, market by market for that, you know, for that. Unless people start, you know, mailing stuff and shipping it and whatever. But
well, let's not give people too many ideas.
yeah, right.
But to your point, talking about consumer behavior, how do you anticipate that changing? Do you think there's any trends that we can speak to as of this time, or is it still too early to tell what net effect the coronavirus will have on consumer behavior?
See, I mean, that's hard to say, because like the demand is still going to be there. A consumer, so how do you define a consumer? Are you defining a consumer in the illicit market or the legal market? You know, we're talking about the legal market. I think, yeah, it all comes down to the sensitivity and, you know, the discretionary spending that people have.
If you look at the data, it's already shown that, you know, as part of this coronavirus stocking up, people definitely resorted to edibles. Edibles saw a big spike as opposed to smoking and vaping, but we have one client whose retail stores are known especially for their high quality flower. And if you talk to them, they're still selling 80% of their flower, because, you know, that's their niche and people are sticking to it. The one trend that has picked up in consumer behavior is the number of people growing at home. As people are locked up at home, they're taking up gardening, and folks are selling more clones to first-time users than ever before.
Absolutely on the, I mean, it's amazing if you go with the vape crisis in the fall, followed by, it's like coronavirus, it's like almost like a 1-2 punch into the vape market, which a year ago today looked like, I would have guessed a year ago today that July 10th, the oil holiday we could at some point in time surpass 420. But I would say at this point, I saw some numbers today that showed that market share is, I don't say it's like, it's not necessarily facing an existential crisis, but it's dwindling. Edibles are up, and it sort of makes sense, especially a virus that is, a lung airborne type of virus. I don't think people are really looking at, having their cannabis in that way. And one thing I was talking to a client this morning in preparation for this webinar. That is right, I did prepare. They were saying 80% of their business is now all online ordering, right? So, and what that is, I think, like some part that's going to go away because people still like to go to a dispensary, especially first-time users to get educated, etc. But now what that's done, and I sort of talked about earlier, like accelerating the future of cannabis, we're fielding calls from our clients and from maybe potential new clients about, hey, now this is moving online quicker than we thought. Can you help us now look at our online policies, our privacy policies, our terms of service policies? Because now that has become, especially California, right, where Aaron is. I mean, there's, that California is the strictest privacy policy in the country, potentially the world. And so you need to, you want to make sure that now that your presence is becoming more digital, that you're, looking into that and taking care of that, because that feels like a trend that's going to stick around. Not curbside delivery per se, but online ordering, picking up, and delivery. I think people are going to start to. We all knew it was coming, but now, like all of a sudden, last week, DC, which had no delivery program, enacted an emergency program. Michigan has pushed forward with this program. All of these states are. It makes sense, right? It's like you don't have. It's part of the social distancing, and I just can't imagine you're going to have that and they're going to pull that away.
Well, and it's two steps. I agree with you 100%. Delivery has spiked, and whether customers, are using delivery for 1 month, 2 months, 3 months down the road, what's it going to look like when we transition back? Because at least in California, as part of their reopening plan, a big focus is being placed on how are businesses going to change their floor plans in order to operate safely? How are businesses going to change their behavior? Lots of cannabis businesses are known for having that one-to-one concierge shopping, where you have an employee kind of following you around the place and shopping right there with you. But at the same going forward, is that still going to be there? What's going to happen in the future as we transition back to the retail model when folks are willing to go back into the retail storefront?
Well, do you think this encourages more technology development, such as kiosks, more online presence, e-commerce?
I mean, pickups have been huge. I think people like pickups and ordering everything online, but I think it opens the door to that first-time customer. How is that first-time customer going to get education? And you know what I mean? If you're an experienced user and you know what you're looking for, sure, I can go to a kiosk and order what I want and get it in 15 minutes and pick it up. But when you're talking to a 55-year-old woman who's a first-time customer, who knows nothing about using cannabis, who needs a little bit more hand-holding, what's that going to look like in the future? What type of environment are we going to be bringing her into to make her feel safe and comfortable?
And we've seen an uptick in that regard, not exactly in that regard, but in a close regard of like telemedicine, right? More doctors being certified patients going through those portals. And there's, people like to sort of poke fun at what California system was before in terms of getting a medical card and how easy it was. When I started to go to California in 2013, I got a medical card and I had a telemedicine consult, and the guy was very educated and super knowledgeable and really informed me and educated me with respect to the process and the products. And so it's not just a ruse. And so I don't know, we've seen a big pickup in that aspect of the business.
Now, just speaking as a lawyer for a second, does that potentially open up some of these cannabis companies to additional liability if they are moving towards a telemedicine type model?
I mean, it how could I say no to that? I mean, but the it does, right? It's a new avenue, but the states are permitting it, so it's not necessarily a liability vis-a-vis the states. And again, I think like if you adopt proper privacy policies, which are not all that complicated, it gets a little bit more bespoke when you're dealing with terms of service, right? Depending on what kind of company you are, your offerings. But privacy policy is a pretty standard way to sort of let people know how you're handling stuff. But sure, it opens up another avenue. But I think done properly, it's just another way of interacting with commercial cannabis community.
One thing I think maybe we should touch upon, because I don't know how much time we have, is just sort of the capital markets and sort of the lack of liquidity. And this is what the concerns I have. Most at the forefront of everything is just sort
Matt,
of.
I think you were reading ahead. That was quite literally the next topic. So.
Okay. But anyway, we were sort of operating the industry as a whole. It's been fragile. It's been a fragile industry for several months prior to COVID, maybe even a year. And as the capital markets and as capital has become more and more scarce, there's more and more, we'll likely see more and more, consolidation or bankruptcies or whatever. One of the biggest, I think, drains of cash for these plant touching businesses is the tax burden that's associated with 280E. And we're just starting to see, because a lot of these companies have gone public, we're able to see exactly how much they have spent. There's always been some question about what the actual taxes would be. It is very significant. So this kind of further points to my thought that, obviously federal changes to federal law has to happen soon, because of a lot of these companies have a tremendous overhead burden. On top of that, it's competitive. On top of that, the tax burden. So how do you solve all this? Yes, I think this is going to spur the discussion about state legalization, and maybe more efforts will be made. But at the end of the day, if you take a step back, so what? We have to change the liquidity issue. And how do you do that? You have to do something at the federal level. And
also, yeah, I don't know if you were posing as, I mean, one thing we've seen, I think, right, I think we already kind of discussed this, but was there, safe banking, which was, a couple members of my firm were on the National Cannabis Roundtable, and we've been in DC on lobby days, and it was very apparent when you go to, you can read all you want about safe banking, but it was dead. It was not, people were still talking about it, but we knew that it wasn't going anywhere. But all of a sudden, there's life breathed back into it. And, it's not necessarily the answer to all of these issues that Matt's bringing up, because he's bringing up a lot of good issues, but it's just it would be one further indicator that this is an acceptable business, and this is it's a safer place. You can park
what I'm thinking now, though, like it's almost not practical. I mean, the government never made sense to begin with, but to try to get one issue passed, just to have it all segregated. Let's talk about banking and push that through, and then the next session, let's do the States Act and all. Just do it all together, like.
Just legalize it, Matt.
Yeah, so I don't know. It's just not practical to keep, pushing kicking the can down the road further and further and further, because
so Matt,
now, and I think just the whole unemployment issue may be an impetus for a different discussion at the federal level, and maybe this will lead to bipartisan support. To just do something, because it's not a matter of, we don't like pot. One side of the house and the other is like, okay, we're all in favor of it. It's the economy. It's a public safety issue now with the cash floating around, with known addresses. We know that crime ticks up during economic hardship. So I don't know. I get very riled up about all this.
I love your enthusiasm, and I hope the Safe Banking Act passes, but the fact that all cannabis businesses were left out of the CARES Act and sort of recovery, to me really is a signal as to where the federal government's mind is right now with respect to cannabis. And this current marketplace and the virus itself is just putting everything into hyperspeed, and we're going to see a lot of failure. So what it means for investors is those inefficient businesses that are out there, whether they're poor operators, whether it's a publicly traded company who's just, you know, looking for that next round of financing to cover their debts and can no longer reach it. If it's companies with corporate executive bloat, we're going to see a lot of failures coming up. And because of the lack of bankruptcy protections available to cannabis businesses, there's going to be groups of investors who go on a buying spree, who have confidence in this industry long term because it is an essential service. And you know, everyone with that entrepreneurial spirit and a dream sees something here, and they think that they're going to be the one to build that big national brand. So I think we'll see failure, and we'll see folks looking to scoop up assets at dirt cheap prices relative to what was happening a year ago.
So how do you anticipate, and this is a very broad question, how do you anticipate valuation metrics changing?
They're going down. That's how they're going down. We've seen a couple of deals in the last couple of weeks that have, you know, that are getting re-examined and re-struck, you know, because of, you know, I mean, things, again, now we got the benefit of being deemed an essential service, but don't get to be, to access the Paycheck Protection Program, but are subject to the Family First Act, right? So it's like, it just, you know, keep on kicking these companies down. And so we see like a deal that we were working on, you know, it's being done now at a lower valuation, right? I mean, that's just, I think that's just the reality. It makes you go back in your mind like 8 months ago or 12 months ago, and you wonder whether or not, you know, when you're dealing with entrepreneurs who are looking to raise money, they want to raise the minimal amount of money because it's dilution to their founder shares. But I would always be trying to advise them to take as much as is being offered to you at that time, and you know, so you own just a little bit less of a you know, a more viable enterprise. And you look back now and you wish that more of that was done, you know, because now companies, this is a bad time to be seeking capital. I think Q2 is not a great time to be seeking capital, which then goes into the summer, which is never a good time to be seeking capital. So it's, you know, there's going to be good deals. And I think, you know, we had a quick call yesterday, right? And Matt made a good point is, you know, something that was valued at $100 million a year ago that's now valued at $2 million doesn't necessarily mean it's a good deal, right? So it's still going to require a lot of tire kicking to figure out what the good deals are. But there are, you know, there are going to be good distressed deals out there, you know, that are, you know, good business plans, good footprints, over levered, and with this idea that capital was going to be there, and now it's not. And so it's you know, there's a sadness to that, because there's these, feels like entrepreneurs who built this industry for the last 8 years, and now like finance is going to kind of come in and take a lot of it. But that's the reality of when you need to use other people's money to effectuate your business plan.
One thing I would add too is a lot of folks have like compared the trough multiple of the cannabis space. I'm talking to the public markets now, to like looking at comparable industries such as alcohol and tobacco. And I don't think it's comparable, because in the cannabis industry, you have risk factors that you do not have in these other industries. In alcohol, you could bank. It's not federally legal. So to say, you know, oh, the trough multiple, you know, in beverage is 1 times whatever, you can't make that comparison to cannabis. I think whatever you see in other industries, you have to take a haircut to that because of this extra risk that, you know, is inherent in the industry overall. So that's just looking at the public market.
But Matt, it's essential, and the demand is inelastic, right? You have to. Well,
demand, but it's essential. But where is the demand? How are you going to satisfy the demand? Yes, the demand's there. Are you going to go to your dealer, or are you going to go to your dispensary? That's the
Hypothetically speaking.
So,
Speaking purely in hypotheticals here.
I mean, of course. I don't mean you. I mean, you know what I mean. But you know.
Right.
Of course. So we've talked about the public markets a little bit. What net effect do you think this has internationally? So we've seen Canopy growth. They've closed their high-cost indoor plantations. what do you think is the effect internationally? And I would group Canada into international as well.
I mean, well, if anybody wants to take that, I just think it's going to be country by country, and I think everybody's going to rethink their strategies. And it seems to me that the U.S. Is more stringent, and there's many more hurdles and bottlenecks than other countries. I don't, like this whole 280E issue, I don't think that they have elsewhere. So, it's hard to say, but I would just say, just generally speaking, it's a reason to pause and to rethink.
Yeah, I think I don't see it being different anywhere else. I mean, like you looked at like Canopy Growth, what they did last week is very, I sent that article to one of my clients and said, see, it's not just you that has to cut off your left arm to survive. This is the biggest, weed company in the world, ostensibly, or top 5, and that's doing exactly that. So I think it's either micro or macro. It's a similar, people are going through the same thing, and at the end of the day, I think most of these countries are still looking to the U.S. as the prime cannabis market, and so I think this is not a particular issue just to the U.S. I think it's a worldwide issue.
Everywhere.
It's global pandemic issue.
So we did mention a bit about legislation. In an ideal world, pick a state market, pick the federal government. What do they do next? How do they help the cannabis industry move forward at this point?
I think, I'll look at California because it's the jurisdiction I'm most familiar with. I think with existing licensees, if they wanted to provide them a break, delay licensing fees, lower taxes, let people adjust to the new normal in order to adapt to the new conditions, because 6-figure licensing fees paid all at once is a huge blow to any business during this economy. But going forward, I would invite smaller California cities to look at cannabis as a potential jobs program, because in California, if a city really wanted to be ambitious, they could get an ordinance done and applicants selected in 6 months. They could move very, very quickly if they were looking for non-retail opportunities to put people back to work with good middle class paying jobs for this market that is obviously done well and continues to do well in the midst of the pandemic.
I think I agree with that. I mean, you got to cut some slack to these companies. I mean, you can watch certain specials on TV and think that cannabis companies, all have these machines counting $100 bills and making money hand over fist, but everybody on this call knows that that's not the reality. That the business is a hard business, and the politicians know that as well. So they need to just, in recognition of it being an essential good, and recognition of the fact that most of these companies are not laying off people, and most of my clients are not laying off people right now. And and if people are even calling and saying, "Hey, I'm not comfortable coming in," paying them out under the Family First Act or under the CARES Act, and even going beyond what those acts require. So these are businesses that during this time period are putting people to work, and I hope in recognition of that they can cut these businesses a little bit of slack so that they can get back up and running. Because otherwise, I agree with Matt, and I'm not necessarily nearly as doomsday as he is, but there's gonna be a lot of carnage if it just everything stays the status quo, and we have to deal with this economic downturn. Something's got to give.
I just think this will be, I hope anyway, that this is an impetus for another fresh discussion at the federal level, because this COVID situation is going to be a lot more serious, I think, from an economic standpoint than people really realize right now. And there was a big argument for pot legalization right after when the 2014, when Colorado first went rec. I think some politicians were very excited because this is on the heels of the economic downturn from the financial crisis, right? This is going to be a lot more profound. and significant this economic downturn. I mean, there's no doubt about it. It has to be. And we still don't know when the end of this is going to happen. We don't know, in the fall. We just don't know. There's too much uncertainty. And so at the federal level, I mean, they could just really reinvigorate this industry very quickly, because then the capital can flow, the professionalism, coming from these multinational companies into the industry. We're seeing that. Look what the transformation at Canopy Growth from Constellation, right? We started out with just a generic kind of cannabis company. Now we have, they're cleaning house, right? And they're making it more efficient and so forth. And we could see that more widespread throughout the industry if the federal government just does something. But having said that, I wonder, they're making a lot of money off of 280E, so the federal government has to figure out how they're going to make money. I mean, they're all about the money. I mean, yes, jobs and so forth, but when somebody's going to have to pay for all these stimulus checks, right?
Right, but again, going back to what we said about the states before, yes, but they have to get smart, because otherwise you run the risk of killing the golden goose, right? You can't.
So we had two questions come in that are relatively related, and I'll sort of combine them together because I think there's an interesting topic, and I think we'll make that the last topic of discussion here, since we're getting close to 2 o'clock. The states that have not enacted a medical or adult use program to this point, do you think this is the time where they prioritize looking at this type of legislation? And as a part two to that, given, as we've discussed, the level of effort, the level of infrastructure that has to be created, and the capital, not only political, but financial as well, is it worth the potential opportunity cost to enact a program like this, or to upgrade or supplement from a medical to a full adult use program?
My view is, I'm sorry, I'll let the other guys say, but if you're in an existing medical only state, you could flick the switch, make it into rec very easily. If you have nothing going on right now and you've been just sort of toying around with this idea, I think your time has come. I mean, it's over, really. I think it's going to take too long to get up and running, and you might as well just sit back and figure out what's going to happen at the federal level, and then figure out how that state is going to make money off of this.
But yeah, I don't agree with that. I guess I don't agree with that. I think that these other states, I agree with most things you said, Matt, so it's all right for me to disagree a little. But yeah, I think these states are going to, it's not just like, we were talking about like these states, like, I mean, they're not just pieces of land, right? They're people. And those people are looking at other states saying, cannabis is like, it frustrates me to be living in New York during this time where I can't, easily access cannabis. Right? It's like, so I might, maybe I make a call to my congressman, but if you're in a state where you can't get access to it at all, and you're seeing other states where it's deemed an essential good, it's gotta, on some level,
I wouldn't disagree with that. What I would just say is just the practicality of it, just the time frame, just the mere,
Yeah, but I think you keep on going back to that, but I don't think people think in those terms. I mean, the time frame is the time frame, but you can't lament the past. You can only start where you're at. So here we are today. We don't have a program. Other states have these programs. They're generating revenue. They're creating jobs. They're essential services, and it makes their constituency happy in some way. They're buying this product more so than they were buying it 6 weeks ago and 8 weeks ago. So I think I don't see how. I can see a lot of challenges ahead for this industry, but the idea of the adoption of it as a real legitimate product category just feels to me like this essential good designation just puts an end to that.
I'm just saying that in 2 years or however long it takes, by that point in time, federal legalization would have occurred. And so it's like, why go through the rigmarole and the hassle and the burden of these discussions when, the golden goose is right there in a different format. That's all I'm trying to say.
I think the problem we're going to run into for all states, whether they have adult use, medical, or nothing, is that there are just so many competing interests in crisis right now that there are more pressing issues that they just never get around to doing anything cannabis related, just because there's more immediate fires that need attending to. In California, there were 24 regulatory reforms that have all, the message we've been told, these have all been essentially tabled so the legislature can attend to the COVID crisis. If you want to bring about regulatory change, your best way to go about it is going to be to tie it into COVID and make it COVID related in order to happen. And we saw it play out in New York. New York was at least looking at a cannabis program as part of the budget program. But when
Well, we can say, so we were pretty fortunate in that we actually had a seat at the table. We were able to discuss with Governor Cuomo's team actually how to structure the tax program and how, to your point, how to get this done in a timely manner so that it does fit into the greater crisis here.
But didn't they scrap it? It was scrapped to pass an emergency budget, and maybe they'll get to it later. But right now we've got to figure out how to fund the state.
Exactly, but it speaks to some of the serious fundamental issues that a complicated state like New York really faces. It's unfortunately, it's not just New York City, where if that were the case, this would be, rubber stamped through more or less, to oversimplify it a little bit. But you're dealing with a pretty complicated state with a lot of complicated issues. And I know California's in the same boat.
The state has 1,000 different things they're working on. And while cannabis is hugely important to all of us here talking and important enough to folks tuning in, to the state, it's just one of 10,000 issues they're dealing with on a daily basis. And I think that's going to be the trouble of getting a state to say, okay, we're on fire right now, but let's bring about cannabis reform, in the next 3 months.
Right.
I wish it would happen, but unfortunately, I think, for at least a year, cannabis is going to be in the back seat and the back burner in a lot of places. There's just more pressing issues at play.
Agreed.
All right. So now that we've reached 2 o'clock, I think we can go to final thoughts here. So if each of you guys want to take a few seconds to just give any final thoughts you might have on where the industry is, where it's going, just what you think maybe needs to be said that hasn't already been said.
My final thought would be just to say, look, I think, again, it's essential good, essential service. So there's a positive spin on it, but these are challenging times for everything. And even more so, I think, for cannabis. We're seeing at the law firm, a rise in litigations, right? Because now that, the tide is out, people are seeing that their investments are impaired, and they want, someone to look through and see, where they misrepresentations in connection with their, their investment and partners fighting each other, right, during these times. And so that's an unfortunate reality of the situation. But look, it's there's a liquidity crisis. Investors are sitting on the sidelines right now, and it's a challenging time. But I think cannabis has gone a long way in the last 6 years, and this is not going to be coronavirus is not going to be the knockout punch to cannabis. But we have to just have our eyes wide open and try and guide our clients and the industry in a way that, we get on the other side of this.
I would say, having worked with legal cannabis businesses through the financial crisis, for 10 years ago, the cannabis industry shrugged and said, what financial crisis? I think we're feeling it a little bit more this time. And we will feel it a little bit more this time just because there's much more structure to the industry. There's higher taxes, but like any other industry that's out there right now, it's been turned on its head, and there's tremendous opportunity all over the place for folks who can solve these new problems. We're going to see new models be developed. We're going to see new services arise, new efficiencies, and new customer behaviors. Cannabis, the adult use rollout in California and other states surpassed, any expectation I had coming into it. And while the next, couple years might be a little rocky, I still think there is going to be tremendous opportunities for folks who can bring value to the industry and help it to continue moving forward during this time period.
Can I just say, I wish those were my closing remarks. Well said, Aaron. I totally agree. Totally agree.
And I wouldn't disagree with anything. And I really do think that, you know, the opportunities are significant and nothing's going to really change at the end. It's just we're taking a detour now. And the road is a little bit more bumpy now than it was in the past. And some people are going to fall off the road. Maybe more people will fall off the road, but the people that are staying on the road are going to get to that, you know, to the golden goose. Yeah, I mean, I would agree. This isn't the knockout punch to the industry. It's all the more reason to be more cautious, to do your homework, to be more diligent when you evaluate your investment opportunities, and to be aware of, you know, some of these snakes in the grass. I had to do a pun somewhere in there. But yeah.
Yeah, nice ones. Thanks.
I can't think of a better way to close it out than with a very corny weed joke. So that's exactly where we leave it. So I want to thank everyone for attending. And of course, to the panelists, thank you again so much for what was really a very fascinating conversation here. So this was great.
Thank you, Zach, for inviting us. Appreciate it.
Of course.
Nice job. Thank you, everybody. It's a lot of fun.
Thank you.
All right. Thank you, everybody.
Happy 420, everyone.
Indeed.
Happy 420 indeed.